All right, hello everybody. Aaron Hunziker here with 123 Trade. Excited to talk to you all today about one of my favorite topics that are out there. We're going to talk about understanding Fibonacci levels and the ABCs of trading the Fibonaccis, which have been around for thousands of years, oftentimes called the golden ratio, nature's numbering system. It's mathematics, my friends. Now, the good news is you don't have to be a mathematician to understand this out. You're going to see the brilliance of technology, how it can do a lot of work for you. And when you understand the ABCDs of the Fibonacci, you're going to talk about clear entry points, clear exit points, support, resistance, and we're certainly going to talk about how we enter with proper equity management with stop loss orders. So I'm excited to show you exactly what we're going to talk about in the ABCDs of trading. And certainly anytime through this presentation, if you like what you see, click below on the show more section and we'll be happy to get you more information. Thank you.
Thank you for joining us, folks. I'm Will Bridges from your team over here at 123 Trade. Fortunate to have a guy like Aaron in the video here today. Do want to make sure we cover our bases. Risk disclaimer, everything in this video will be for educational purpose. Aaron's going to show a lot in this video, so keep in mind you do whatever you want with the information. If you want more information, it is available on our website, 123trade.com. You can also watch more live presentations with our partners over at Market Traders Institute, but as I like to say it, folks, you do have to risk it to get the biscuit. There's no such thing as a guaranteed trade or a guaranteed win. The only thing you can control is your risk. But once again, like, subscribe, ring the bell if you want to support us. Lots of information coming in the video. I want to go ahead and send everything back over to Aaron Hunziker. Enjoy, folks.
All right, welcome back. Again, Aaron Hunziker here with 123 Trade. We're talking about Fibonacci levels and the ABCDs of trading. Now, when we speak of Fibonacci's, it's not so much a what as it is a who. It's an actual person. And when we talk about that person, we're talking about good old Leonardo Fibonacci right up there, right? What good old Leonardo Fibonacci discovered, as I said, very famous 13th century mathematician. And I believe that is his high school yearbook photo. I'm not sure. But Leonardo Fibonacci, brilliant mathematician, way ahead of his time. What he discovered is that everything in the universe is connected, and there's natural energy patterns that occur throughout the universe. And what this is based on is really the idea that the heavens have certain ratios of distance apart, such as the Earth to the moon, distance to the sun, amongst other things. And the golden ratio can really be found everywhere. In fact, when you start to look at things such as everything out there, the way that animals reproduce, they reproduce in a predictable mathematical pattern, the golden ratio, right? If you look at the petals on this sunflower right here, they're not random. They're in a repetitive pattern, a natural pattern that can be repeated and predicted through series and sequences of math. You can apply these concepts to really everything in the universe when you start to talk about the way that crops grow, plants grow. If you look at the solar system, it's not a random pattern, it's a specific pattern that is a repetitive pattern that can be measured through series and sequences of numbers. Fibonacci analysis, the golden ratio, nature's numbering system. Well, you can continue to apply this to everything, my friends. If you look at the stars in the sky, the stripes on a zebra, if you look at the scales on a fish that you pull out of the lake, if you look at the print on your thumb, it's not random, it's a natural energy pattern. Well, the beautiful thing when you start to understand these patterns is you will see that they will repeat over and over again. And these patterns are also in the markets. And these patterns can be measured through Fibonacci analysis. And we love to apply this to trading the currency markets here at 123 Trade. And one of our partners, one of the people that helped me learn to trade, incredible trader, mentor, teacher, Jared Martinez, the FX chief, is a pioneer in teaching people around the world to trade Fibonacci analysis. So as we go through this presentation and this video, if you like more of this and you want to learn more about our partners and how I learned about all of this, always like the video and click show more in the show more section below. Make sure you do that. But let's talk more about today Fibonacci analysis as we open up some charts and we start to have some fun. Now, what you'll start to understand about the markets is the currency market is very unique in the sense that it's very much a pattern, an energy pattern that loves to repeat itself. And you'll see this visually if you're brand new to trading. And when you start to understand these patterns and you see these patterns, and then when you apply Fibonacci analysis onto it, what it helps you understand is clear exit points, entry points. It's a pure technical analysis tool, right? And when you start to understand these Fibonacci levels, these natural patterns, it's going to help you manage when to get in, when to get out, and the opportunity in the market. But here's the thing. What you'll first start to learn about the currency market when you visually look at the charts is the market moves in very specific wave patterns. The currency market moves in these natural energy patterns, on the way up, on the way down, on the way up, on the way down. And you're going to see this in a moment when we hop into Fibonacci analysis in the market, right? When we talk of these wave patterns, what do we mean? What we're talking about is the currency market makes what are called lower lows, right? Lower highs, I should say. Higher lows, lower lows, right? Higher lows, lower highs, and it keeps moving in these waves, lower lows, over and over and over again. Natural wave energy patterns. Now, the beautiful thing about the currency market is these patterns will repeat themselves. And when you start to understand the concept of the ABCD pattern, now you can apply this technical analysis to this, start to understand these wave patterns, but more importantly, where they've been, where they're going to go in the future so we can go look to profit on it. Now, every successful trader, you've got to know three things in every successful trade to be profitable. Number one, you always have to understand what is called overall market direction. Market direction. Overall market direction, right? That's number one. Number two, ION, right? Market direction. Number two is always going to be understanding entry points, when to get in. Entry points. And number three, you're always going to have to understand, right? Exit points. Exit points, when to get out. So we have to understand overall market direction, when to get in, and when to get out, right? Now here's the thing. This is what Fibonacci analysis can help us understand. These three things: overall market direction, when to get in, when to get out. Now what we're looking to do as skilled traders is take advantage of these swings in the currency market and buy low when the market is moving up. And then we're looking for opportunity as well, both directions in the currency market, to trade on the way down. And let me say one thing about the currency market. It's much easier to trade directionally down in the currency market than it is the equity market. See, in the equity market, in the stock market, you either have to have a margin account, you have to trade put options. You don't have to do any of that in the currency market. You simply enter your trades on the way up and enter your trades on the way down, okay? But today we're talking about opportunity. We're going to trade up in this market, trading what we call Fibonacci extension. So we're looking to profit both directions. Now again, one of the philosophies we love to teach, Fibonacci analysis. How does this work? Well, let's take a look at this. As we mentioned a moment ago, the currency market will make what are called higher highs and higher lows, and higher highs and lower lows, and higher highs, and then it reverses, and it makes what's called a lower low and a lower high and a lower low and a lower high and a lower low. Wave patterns, right? All right, so how do we start to apply these concepts to understanding these wave patterns? And then we're going to put this on some candlesticks, and then we're going to put this on a chart, right? A live chart, an up to the moment chart. But the currency market moves in these wave patterns. And again, one of the concepts we teach is what is called the A, the B, the C, the D pattern. And again, if you want to learn more about how I learned about the ABCDs, and a pioneer and innovator of teaching the ABCDs, make sure again you click on the show more section below. But let's talk about how this works. Natural energy patterns. The way you start to apply the ABCD, very simply, you start with your low point, which is always your A. Your next high point is always going to be your B. So you got your low and your high, your A and your B. This, my friends, very important. That is what is called the C reversal, or the C entry, you could say. And this, my friends, is what is called the D extension, right? So we got the A is the low, the B is the high, the C reversal, that's our reversal pattern right here. Watch this. This is our reversal pattern as this is moving down right here. And then this is the D extension on the way up. So A, B, C, D. Pretty simple up to this point, right? All right, now watch. As we start to speed this up a little bit, What I'm going to do now is I'm going to apply what's called a manual Fibonacci. I'm going to drop down my little box right here, click this down, and I'm going to drop this down, and 1, 2, 3, I'm going to find my low, and I'm going to draw this right up to my high. My A to B right there, right? A to B, low to high right there. So here's the thing. That is a manual Fibonacci, low to high, A to B. And what that brings out for us is these Fibonacci levels. All of these right here are Fibonacci levels. Those are natural energy mathematical patterns in the market. So what do we do now? Well, the first thing we're going to look for now is once we see that the market has formed a low, this currency pair has formed a low, this opportunity has formed a low, moves up from an A to the B to the high, what we're looking for now is a switch of reversal, a transfer of energy. But what we have to identify are what are called the buy zones. Now, there's 3 buy zones as we use this trading platform. Now, here's the thing. This is SmartTrader, brilliant technology. If you're interested in learning more about how you can use this technology, make sure you either ring the bell, you subscribe, you like the video, or certainly click the Show Me More section below, and we'll get you information on how you can use this technology. But watch how this works. We got our A, our B, our C, our D. Now we need to bring in our 3 buy zones. Right here, we're going to color code this very first zone right here. We're going to make this one called the green buy zone. Now, in a moment, everything that we're doing manually right now, I'm going to do through one swipe of my finger on your phone. You could do that, or I'm going to do it a click on my mouse on my PC. In a moment here, all this analysis, this technical analysis will be done, boom, 100% accuracy with the click of the mouse, the swipe of the finger. You're going to see the brilliance of SmartTrader technology. But let me show you how this works manually, drawing this. So that's our green buy zone. Right here, this will be the blue buy zone. So we got green, and now we've got blue. Can everybody see the color? Yes? All right, good. So we got green, we got blue, and then we've got what's called the red buy zone. This is going to be the red buy zone. Make this one red. So we got the red, we got the green, we got the blue, and now we will have red right there. So what we want the market to do, so let's come right back here, and we're going to look at this opportunity right now. And again, don't worry about the currency pair, any time frames or anything. I just want you to see this visually, because again, we're going to put this on some candles, and then we're going to lay this on some potential opportunities in the market. So watch. What we're looking for is, again, A, B. This is what we're looking for, is this natural transfer of energy, this shift of momentum, this transfer of pattern. And you're going to see the currency market as you get more familiar with it. It's all energy. So when this natural energy pattern flips, this C reversal pattern takes shape. What we want to do is we want to buy into the energy of this market, trade this on the way up, and then let those natural laws, those natural patterns of Fibonacci analysis, the math, to tell us when to sell. Okay? Now, when we are trading up with these concepts, we trade to what are called Fibonacci extensions. Now, at any moment, we can flip these indicators over and we can trade these concepts down. When we trade down, we trade to retracements. Okay, so in review, when we trade up, we trade to what? Extensions. When we trade down, we trade to what? Retracements. Up to extensions, down to retracements. So in this example, we're trading up to an extension. So this is what we're looking for. The low, the high, this reversal pattern. Now, we will use different types of analysis down here to enter into a trade. We will use trend line breaks. We will use counter trend line breaks. We will use candlestick formations. We've got some fantastic videos coming out on those topics. If you're interested in learning more about that, again, subscribe below. But here, I don't want to get bogged down on that right now because I want to stick to our topic today, the ABCDs and the overall understanding of Fibonacci analysis. So let's just say, for a quick example, you decided to enter into a trade down here in the green buy zone. So we got the red buy zone, we got the blue buy zone, we got the green buy zone. So let's say this pushed all the way down, okay? This pushed all the way down here into the green buy zone. Okay. So this is where our C entry pattern has appeared. So let's just say we decided to make a trade and enter into this. Now, if you look up here, there's a green line. Again, that's our Fibonacci extension. That's an extension. That's an extension. This specifically is what is called the 1180. Again, that's a natural energy pattern, Fibonacci analysis. If you can imagine, now just picture this line going all the way across your chart if it were invisible. Okay? If you bought down here in the green zone, you're going to target to trade this all the way up to you strike that green Fibonacci extension and you sell. Now, why do you buy right down here in the green buy zone? Okay, if you buy in the green buy zone, why do you buy here? And if you do, trade it all the way up to this green Fibonacci extension? Well, it's all math, right? It's all math. What this system, what this technology is telling us, what's the natural energy patterns been around over 1,000 years, the golden ratio Fibonacci analysis is telling us, where we bought down here in that C entry. If we hold on to this trade up here to that green Fibonacci extension, if we hang on any longer, my friends, the math starts to move against us. And the probabilities increase, the trade will go the other direction. So you sell. So if you buy in the green zone, you sell at green Fibonacci extensions. Well, if you buy in the blue zone, my friends, you're going to trade all the way up to hit that what? Blue Fibonacci extension right there. So we're going to trade blue to blue. It's all math. That is the 1270. And if you buy anywhere here in this big red zone, what do you think? We're going to trade red to red to the 1618. So we're going to trade through Fibonacci analysis, green to green, blue to blue, red to red. On the way up to what? Extensions. And on the way down, we trade to what? Retracements. So let's talk about how this works and applying this on some candlesticks. So let's go right over here and look at this particular chart. Okay? Right here. What you're going to see right here, and don't worry about the currency pair yet. We'll talk about that in a moment. All I want you to understand is every one of those candlesticks right there, those green and blue boxes, those are 1 hour. So we're looking at a 1 hour chart. Again, it's the Great British Pound New Zealand Dollar, but it doesn't matter. It's more for illustration for you to see visually what this looks like on some candles. So the first thing we're going to do when we're looking at this particular chart is identify what? The AB, the low and the high. So our last low is right here, right here. Our high is right over here. So we have an A to B, a low and a high. You can do it. And right here, my friends, I'm going to grab that manual Fibonacci. Now again, we're going to let SmartTrader do this for us in a moment. Wait till you see the technology. Pretty cool. AB right here, low to high. So now we've got our AB low to high. But what we're looking for next is what is happening right now in the currency market, in this particular currency pair. We're looking for that transfer of energy, that C reversal, that massive shift of momentum, so we can have that momentum move, buy into that momentum, trade that energy level up, and then let the Fibonacci analysis, nature's numbering system, tell us when to sell. So let's take a look at what's happening right now with our candlesticks. Now again, candlestick formations, I like to call them the sign language of the market. And again, if you're unsure about candlestick and formation, we've got phenomenal videos that are coming out on candlesticks. Again, I'll tell you over and over, click the show more section below so you make sure that you get the information on this to be able to get those. Like the video, subscribe to the channel for sure, ring the bell so you get more of this content because you're going to want to know more about candlesticks. But right now, let's talk very quickly about these candlesticks, what exactly they mean for those of you that are new. We got some green ones, we got some blue ones. Now candlesticks, again, the sign language of the market, they're a representation of how much the market has moved within a particular period of time. Because we're sitting on 1 hour charts right here, these are 1 hour candlesticks. If I click on that candlestick, you can see it's got a date that's back from the beginning of this year, right? First week of the year. It's got a date, it's got a time, it's got a high and a low, an open and a close, and a range and an open and a close. Now, what does all of that mean? Well, simply all that means is this particular candlestick, it opened up right here. Now, when this candle opens up, it moves down for a low, it moved up for a high. That's the range of which it traded within that hour. That's trading range. Well, it moved down and it settled in and it closed green, which means over the hour, the buyers were in control. The momentum, the energy was moving into that currency pair. We trended up. All energy in the currency market. Well, green trended up, buyers in control. Well, every currency pair, every time frame, on the way up, on the way down, the moment that one candle closes, the next candle opens. Automatically, it's clockwork. Well, our next candlestick opens up and it moves up for a high, down for a low. There's the range. And then it settled in and it closed blue. The sellers were in control. The momentum, the energy was moving out of the currency pair. We trended down. over the hour. So again, candlesticks, they're formations. We call them the sign language of the market. So let's just hop over here real quick and let's take a peek at what is happening right now with this particular chart, because we want to understand better about the energy in the currency market. So if we look all the way over here on the far right hand side, you're going to see we've got back to back 1, 2 candles that are blue. So for the last 2 hours, back to back, the momentum, the energy is trending out. The sellers are in control. We're trending down, right? You can see that. What we're looking for is a shift of trend, a shift of momentum, that transfer of energy, that switch with that C reversal, so we can potentially ride those ABCDs and profit on the way up, trading those Fibonacci extensions. Right, so let's see what happens in our next candle. There we go. We got another blue candle. So now that means 1, 2, 3 hours in a row, the momentum and the energy is pushing out. Sellers are in control. Now you can really see this when I draw a trend line. There's all sorts of different trend lines that you can learn about. You've got counter trend lines, inner trend lines, outer trend lines. This trend line right here is a downward trend line. You can see that. That's a clear downward trend. You draw it off the tops of the candles. I know that's not totally accurate, but you get the picture. That's a clear downward trend, right? I should say this way, downward. I should say that way, downward trend. All right, good. So what we're looking for is a shift of trend, a shift of momentum. Do we get that in our next candle? Yes, that's what we're looking for. Do you see how that big green candle has appeared? What that's telling us, my friends, is the momentum, the energy in the market has shifted. The buyers have come in, stomped out the sellers, right? Taking control. It's like they had a bar fight. But the seller stepped in, took control. We got a push of that energy on the way up. And look at this. Look at the breakthrough of that trend. So much energy we broke through the trend line. Now, this is important. This trend line separates 2 important areas. Now, below the trend line, it's called the sell zone. Above the trend line, that's the buy zone. So we got the sell zone. The energy has transferred into the buy zone. But here's the question, right? We have moved into a buy zone. Think about the colors that I just showed you a moment ago. Remember, the red buy zone, the green buy zone, the blue buy zone. We're in a buy zone, right? What color is that buy zone? And if we buy, what color Fibonacci extension are we targeting to trade it to, right? Red. You can see right here, we are in a, you can see right here, we are in, bring this down, a red buy zone right there. Red buy zone right there. That means, what are we going to trade to? Red buy zone, we're going to trade mathematically to the red Fibonacci extension. Red to red. Trade those natural energy patterns. Now, here's the thing. If you were to buy in the blue zone, you would trade to the blue Fibonacci. If you were to buy in the green, you trade to the green. But we're in the red zone, okay? So that means, my friends, we're targeting to trade to what? The red Fibonacci extension. It's all math. Let nature, let what's been around for thousands of years guide you in this opportunity. Red to red, the 1618. Now, the cool part is, when you start understanding these concepts, you start thinking like a trader, you can start to factor your opportunity, right? So if we pull this back right here, check this out. If we know our buy zone and we know our exit strategy, now we can factor the potential profit potential, pip potential in this trade. So if I come right over here and I grab this, measure right on up just like this, you're going to see if the natural energy pattern, if it continues to fulfill, moves all the way up and we strike that, we got about 120 to 125 pips of potential profit. So what do we call that? 120 pip target. 120 pip target. Now, in every trade, in addition to understand overall market direction, when to get in, when to get out, exit and entries, you also have to understand proper equity management. We've got different videos on proper equity management. Again, make sure you subscribe so you get the information. Ring the bell so you know when we get new information out. But equity management is so very, very important on how to manage your portfolios. I'm not going to get too detailed into that. I just want to give you a simple, basic strategy of a stop loss order, a trailing stop. I really want you to understand the overall kind of the concept of the Fibonacci analysis, but certainly every trade, we're always going to structure proper equity management. Here's the thing. If we're just setting up a basic stop loss order, trailing stop, we can be aggressive, we can be conservative. Again, a stop loss order is an automated trade that lets you set up your trades and go to work and go to sleep and go out to dinner, go to your kids' events, their soccer games, whatever. And, have the confidence that if the markets move against you, because they will, you'll get sold out. You're protected directionally. And again, where I learned to trade, if you're interested more about that, again, we'll talk more about that at the end. But certainly, proper equity management is so important. But a basic understanding, you can be aggressive, you can be conservative. If we are conservative, or I should say aggressive setting up our stop loss order, it's just below our entry, conservatively below our A. In this example, it would be right around about 30 pips. So we're going to call this about 30 pips of risk. So essentially what we're saying in this just quick example is we're willing to risk 30 pips for the potential to make 120 pips. Now 120 pips on a standard lot is upwards of $1,200 worth of potential profit, right? That's a 4-to-1 risk ratio right in that area. So what's going to happen is we're going to let nature, the natural energy of the markets, fulfill themselves. Now remember, A, B, C, D pattern. So we've got our A, we've got our B. Here's our C entry right over here. There's our C entry that has come out and identified itself. And what are we looking to do? The mission is to trade that energy pattern to what? The D extension, right? Natural energy in the market. So this continues to move right on up, and you'll see the energy in the market. It's either going to go up and strike our target, or it's going to fall and hit our stop loss order. So A, B, C, D. Say it with me. A, B, C, D. Natural energy in the market. It hits that D extension. Now, the way that I've been taught to trade is what is called rules-based trading. Every decision is backed up by a series and sequences of rules. One of the rules is very simple when trading the ABCDs. The moment you're trading up and you hit that D extension, you sell. You don't think about it. You don't phone a friend. You don't shake the magic 8-ball, right, and hope that something comes up to give you some advice. No. We teach very specific strategy. ABCD, when you hit that extension on the way up, you're out. Now remember, if we flip these over and we trade down, we're going to sell out on that D retracement, right? A, B, C, D extensions, up to Fibonacci extensions, down to retracements. When we hit that D on the way down, boom, we're out, right? All right, now watch how this works. A, B, C, D, we just hit this target right there. And what did we make? Made our 120, a little bit more than that, in about 28 hours. So in about 28 hours, the ABCD pattern performed an opportunity of up over $1,200 worth of potential profit on trading a standard lot. That is the opportunity in the currency market, my friends, when understanding these patterns. Now, the beautiful thing about the ABCD patterns is they repeat themselves. We talk about the wave patterns, right? Waves will repeat themselves 4, 5, 6, right? 7, 8, 9, 10 times in a row before the overall market direction shifts. Let me show you what I mean. And you'll see this in the live market here in a moment. Now watch how we do this. Pull this back a little bit right here. Okay. Let me get this out of our way right up here. I'm going to pull this out of the way right here. Okay. Get rid of that. And I'm going to get rid of this. Okay. Now watch how this works. The natural energy in the market repeats itself over and over and over again. Okay. So we've got our A, B, C, D pattern. A, B, C, D. Well, you know what this is right here? Right there. That candle, that low candle, that, my friends, is a brand new A. Okay? It's a pattern that's starting to develop. Well, we got a brand new B that is distinguishing itself right over here. Okay? So we have an A, we have a B. So if I come right over here and I grab my Fibonacci, now I'm going to show you technology that's going to do all of this for you with one swipe of your finger on your phone. Imagine one click of your mouse on your PC. But you can see right here, and for a lot of people, the first time that they see this, this is where that light bulb goes up, that aha moment takes place. A, B, C entry right in here. We happen to be in another red to red zone. Now, many trades will be blue to blue, green to green, but this happens to be another red to red zone. So there's our C entry, okay? We're in the red zone. which means our target is to trade to what? The red Fibonacci extension. We're looking for a D extension right here, red zone, red target. If I draw this trend line right down through here, this is where a lot of you are going to go, okay, I see it, I get it. I see the opportunity. I see how these wave patterns move. A, B, C, and let's get this right here. In A, B, C, my Fibonacci moving on me. Watch. Natural energy in the market. Does this move on up and hit that D extension? A, B, C, and look at that D energy. And you know what's amazing? When you start to follow these, look at how that pattern, that energy wave moved up, and then it just falls off right there. That is not a coincidence, my friends. That is math. That's the natural energy of the market. A, B, C, D. This pattern produced an opportunity potentially right there of upwards of 251 pips. Again, 250 pips, the potential trading a standard lot, upwards of $2,500, understanding wave patterns. Now watch this. What if we take these concepts and we start to now apply this, right, to charts that are on the move right now? So if we come right over here, we bring up this opportunity right here. Let me bring up some charts for you and watch this opportunity right here. If I come right down here, and I'm going to go ahead and bring up this chart right here. If you look right here, this is current candles right here at the end. So that's a current chart as we speak. Now imagine having the ability to manage these opportunities in the market where you don't have to sit there and draw this out, drag this out, do the ABCDs, but simply having the ability to measure these natural energy patterns in the market. Now watch this. This is built into the trading platform that I like to use, which is called SmartTrader. Very unique technology. If I click this little drop-down box right here and I click on Smart Fibonacci, all I do is I find my low. Look at this. It's very simple. Just drag this around. Again, you can do this on your phone, just dragging your finger. In fact, put it right on your phone and you can kind of move it back and forth. And watch what happens here. If I come right down here and I find my low, 1, 2, 3, and click. With 1 split second, 100% accuracy, there's that A, B, C, D pattern beautifully. And you can see how it has moved through this pattern over and over again. Now watch. What does all of this mean? What this means, if you look at this and you see, is this natural energy pattern has been producing over and over and over again. If you look right here, you'll see a natural A, B, C, D. One pattern fulfilled. And what happens is you'll see it again. These patterns continue to move. A to the up to the B, C, D, another energy pattern. Well, what happens is they continue to move. This pattern, though, continues to move all the way up, A, B, C, move up to another D pattern over here. So that's 4 patterns in a row of potential profit opportunity, but it's not done. The currency market does this over and over and over again. Again, we're on the Euro US dollar 8-hour chart. Watch this right here as this pattern continues to move all the way up. Natural energy patterns in the market, right? Come right here and I grab this trend line. Let me bring this up, or I bring this example right up here. A, B, C right here. Okay, watch this right here. A, B, C. And if I bring this right down here, down, and the opportunity now to move this pattern right on up. Let me pull this back a little bit so you can see visually this trend right in front of your eyes. We've got another right here. Check this out. We've got another trend moving all the way down here. And then where's our potential go next? A, B, C, D continues to move right here. Another pattern has hit A, B, C, D all the way up to right there. So that is how many patterns in a row that is completed? 1, 2, 3, 4. Where are we at right now? We are in our fifth opportunity. A, right here comes down to the B, A, B. Here's our C entry, my friends, right here, C entry. You can see we are in the buy zone as we speak. Look at the trend that's starting to develop right on up. Now we are in the red buy zone, so what are we going to trade towards? Red buy zone, we're going to trade to that red Fibonacci extension, the natural energy pattern. It's already hit 4 waves in a row. would you say that there's a good probability mathematically, and it is all math, that it's going to move right on up and hit that extension again? Well, this last trade opportunity right there, already fulfilling, creating pip opportunities along the way. A, B, here we go. C, D on the way up to hit that D extension right there. How many potential pips is that, my friends? If that just fulfills the 5th wave in a row right here, there's still left in this trade 180 pips. 180 pips. And I will tell you right now, it's not a coincidence that it's moving towards that natural energy pattern. When you start to understand, look at these old previous highs right here. It's not a coincidence that the energy is moving towards those old highs. Does that make sense to all of you? Does that make sense? Well, if you look right here, that's the pattern that it is moving in as we speak. And the beautiful thing is every day, these types of patterns occur in the currency market. If you look at right here, the Australian dollar, Japanese yen, look at that beautiful AB pattern right there, Fibonacci levels. Now, again, I mentioned this earlier. You can trade these concepts on the way up, and you can flip these indicators, and you can trade on the way down. The beautiful part about Fibonacci analysis is that it works in every time frame, every currency pair, on the way up and on the way down. It's a great way to get good entry, get good exit. You'll learn more about the stop loss order process. It's pure technical analysis. Fibonacci levels and support resistance, so important to traders. So here's the thing. If you like this video, you like this type of content, what I need you to do, if you want to see more information like this, right? What I need you to do for me is go right up here, okay? Like this video. That's number 1. Number 2, subscribe to the channel, okay? You'll get more of this type of content. As I said, we've got phenomenal videos coming out on trend line breaks, on support resistance, more tools, more indicators, and ring the bell. Ring that bell so you're notified as we bring more information on board. And certainly, our team here at 123 Trade can help you get a trading account. If you want to learn more about the education that we've all learned from the trade, you can do that. We have live webinars where we introduce this technology, live market, live trading, so you can see all the opportunity to use the best tools, best technology, work with the best people, get the best trading account. If you're interested in learning all more about that, again, same thing. Like the video, subscribe, ring the bell. And until next time, Aaron Hunziker signing out, 123 Trade. Have a great day. Thank you.